Hello traders, Thunderbolt here. First and foremost, allow me to wish you a happy new year 2026. I hope this is the year that brings profitability. I hope this is the year that you find your success. And I'm hoping with the series that I've just started and many more videos that are going to come, are going to help you achieve that profitability. So this is episode number 1 of what I'll be doing every Sunday, raw and uncut. That is pre-market analysis of what I expect the coming week. This is not a prediction. This is just an insight or a look at how I analyze on weekends. This is not financial advice. In any trades you take with my analysis, make sure you always observe good money management. So without further ado, let's get started. So actually, fun fact, I had actually recorded this video earlier and I forgot to record sound. So this is me doing it all again. So I'll be going through a few pairs, that is DXY, EU and GU, and also gold. So those are major dollar pairs. I will not look at USD JPY, USD CAD or USD CHF. But if you have if you know where DXY is going, you can always predict or you can always anticipate the direction of the two pairs or any other pairs that are related to the dollar. So let's get started on DXY. So this is DXY, the dollar index. What I like to do, if I'm coming to the market in a new week, I usually like to start on the weekly. But in the course of the week, anytime I come to the market, I always start on the daily. But since this is also a new month, I like to start on the monthly. So looking at the monthly time frame, you can see that DXY is just in a consolidation. Okay. But if you also look keenly, you can see that we took out this high. We also swept this high. Right. And we had change in state around here. Okay. Around there. So if you understand the phases of price, the market is selling. This could just be a consolidation to continue lower. So if you can look, go back to the weekly time frame. Okay. You can see we swapped this low and then went higher. Right. I'm going to delete that. And then we came all the way and swept this high as well. And then we're having a bit of, I don't know, I'm not sure if this is a retracement or we're going to go all the way down. But what you can expect is, because this is a consolidation, we need to see the market break with momentum in either of the two sides. But for now, any moves that we play have to be short term, as we expect to see what the market actually does. So if we go to the daily, another thing, the reason I'm saying we can't anticipate either to go higher or lower is because we can see that sell side has been taken and buy side has been taken. In short, liquidity has been taken on both sides, creating high resistance liquidity on both the buy side and sell side. So let's go to the daily time frame. On the daily time frame, what you can see is the market is creating lower lows and lower highs. That is bearish market structure. What we can see here is we have an unmitigated PDRA. That is a bearish fair value gap. Okay. And you can see we have some relatively equal highs at this point over here. All right. And we know what the market likes to do with relatively equal highs or lows. Equal highs or lows, they become liquidity. Also nice is because we swept sell side. We took out this low, which makes this high very attractive, mitigating into that fair value gap. and then probably we can expect more sells after mitigate to continue lower. Okay, but we'll have to wait and see. But in the meantime, what we can see the market did is we swept the previous daily low, that is the low of Wednesday, was swept on Friday. That is because Thursday was a new year, which was a holiday. So we have some relatively equal highs again. Between the highs of Wednesday and Friday, they created some equal highs, which could also be a drawn liquidity. I'm not expecting this is not I'm not expecting this to be a swing point. You need to have clear rules of how you mark your, or what you consider to be swing points. But what I consider this is the market swept liquidity, a previous daily low, which is actually a PDRA for me, and mitigated in a small fair value gap, which actually makes this low protected for me. All right. And then leaving some relatively equal highs. This is high number one and high number two, equal high number one, equal high number two, which actually magnets for price. So coming Monday, what I'll be expecting is the market to actually continue with the buy momentum on the dollar from this, the EQ of the previous candle, which is actually the model that I trade, which is a fractal model. In case you guys want a breakdown, or you want me to record a video of how I trade in the actual model, the actual strategy, just let me know. So going to the daily time frame, the hourly time frame, sorry, it becomes actually very clear what I'm actually looking at. You can see on Friday we swept Wednesday's low, swept liquidity, and we had a change in state over here, which makes the whole of this an order block. Okay, which makes the whole of this an order block. All right, so we swept a low and changed state. So what you can see the market did is the market came down to this fair value gap over here, okay, which was a bullish fair value gap, and we had a nice rally upwards, but we left this equal highs at the top. So what I expect on Monday is the market to actually open lower. I'm expecting an open low, high close candle, okay. So I'm expecting the market to sell to a PDRA, which is, we have one fair value gap number two, which actually looks like we've actually mitigated into it a bit. So I'm expecting the market to sell lower, probably into this, okay. And then I can look for some continuation trades. I can look for a CSD, and I can look for buys to take me higher, to take out this equal high, and potentially take out this as well into that daily fair value gap. So that is my anticipation on DXY. I can go forward, proceed, and look at the Euro, EU. So this is EU. Again, I'll start on the monthly. Same as DXY. You can see we had accumulation, we had a manipulation, and then we have this as the distribution, changing states over there, and you can see we had a mitigation at this in this order block over here, this series of down close candles. The market is potentially consolidating from this point, expecting the market to probably go high and potentially in future take out that high as liquidity. Okay, so let's go to the weekly time frame. So on the weekly, what we have is this low that did not get swept. That is a low, but the high was actually taken out. If you can remember from DXY, this low, which corresponds to this high on the daily, on the weekly, sorry, you can see this is the high of 28th July that was taken out by the high of 3rd November. So 28th of July, you can see 28th of July, the low of 3rd November, the candle failed to take out this low. So this makes it an SMT. So with an SMT, DXY actually manipulated. DXY swept liquidity so that EU did not. So we expect that EU is actually the stronger pair. EU is telling us the truth, and DXY is the one that actually manipulated. Okay, so SMT with DXY. I like to indicate which asset I have SMT with, so that I always have that in mind. What we have again is after we took out this high, the market actually rallied lower, failed to take out this low because of the SMT, and we had a bit of a rally upwards. Okay, so if you're going to expect the market is going to buy and take out this, you expect that this is actually high resistance liquidity, because you expect a lot of the liquidity was actually swept at this point. Okay, so we have a fair value gap here, a bullish fair value gap, which actually correlates with DXY, where we had a bearish fair value gap. On E, we have a bullish fair value gap. So we swept a previous daily high, a previous weekly high at that point, sorry. And we had the last week or the previous week now, a bit bearish, but failed to take out the low of the previous week. So this is actually liquidity. So we swept out, we took out this high. So we expect to take out this low now, and potentially or probably, which would actually be really nice, is we mitigating to this fair value gap and potentially continue higher. So if we're actually going to buy, we actually need to mitigate, or rather it would be really nice to come into higher time frame PDRE, and then we can actually get the potential trade higher. So this is the daily time frame, and what you can see is we have these relatively equal lows at this point, equal lows, which is actually a magnet for price. And what we have again is we swept the previous daily high. This is the high of Wednesday, and this is Friday. So what I can always expect is a sell trade from the EQ of Friday's candle last week, according to my model. And there's a whole logic of why I expect that. If you guys want a video again, just let me know. So you can see from this point, on Friday, took out the high of Wednesday. We had a change in state over here. Okay, so the market came really nicely, mitigated that order block and had a sell. We have another change in state over here, making this series of up close candles our order block. So what we expect again is I expect an open high, low close candle. So I expect the Monday to open higher into this series of fair value gaps, this 1, 2 chain fair value gap. Okay, so I expect the market to come, mitigate that, potentially look for another change in state, and look for continuation into this zone. A lot of factors will be considered before I take this trade, including my risk to reward. So my risk to reward actually needs to be enough if I'm actually going to consider the sell trade all the way from here. You can look for trades on the 5 minute to improve your risk to reward, although all my trades I take from the 1 hour time frame. Go to GU. So what we have on GU, go to the monthly. So we had a sweep of this low. Okay, we had a change in state over here, and you can see the market came to react from this fair value gap over here, and coming to this fair value gap over here, which is a bullish fair value gap, and we're having a really nice, also took out this low, and you're having a really nice up movement upwards, potentially to take out this high. But our first drawn liquidity would be here, potentially long term. Coming into the weekly time frame, what we have is what we saw on the monthly sweep of that low. Okay, so anticipating that we take out this high and this swing high and this one potentially. Okay, so you can see the week of 22nd December was extremely bullish, and you can see that the last week was we closed as an inside bar. Okay, we didn't take out the high, but you can see this is what I'd actually expect is more bullishness, although I'd hesitate a bit on the buys because it's been a while since we had a swing point, so I'd expect the market to actually go lower and sweep out this low. If this is because we don't have we don't have a fair value gap. The last fair value gap we had is all the way down here, which is a bit far. Far. So when you have an inside bar, that is always an indication of a consolidation. The market did not actually rally. So what I expect is the low of this candle to actually get taken out like this, and then you can actually potentially go higher. If you go to on the daily time frame, so this is what we have on the daily time frame. So on the daily time frame, the market is actually reacting from this fair value gap over here, which is a bullish fair value gap. And the market actually created a swing point over here. So we took out this low and closed inside the range of the candle of 30th December. The next candle was not a momentum candle, but you can see that this candle is a nice rejection candle, which actually tells me that the market is ready to pump higher and take out these equal highs. Okay, so our drawn liquidity on GU is all the way up here, which is a buy, contradicting what we had on DXY. So we'd actually expect GU to sell, but GU is actually showing us buys. So which is actually an indication of which actually tells me I should not be trading GU, or probably just wait for Monday to play out and see how Monday's candle closes, which would actually give me a bias on what to actually trade on Tuesday and Wednesday or Thursday, depending on how the market moves on Monday. So our last asset that we're going to look at today is gold. So let's look at gold. Let's start on the monthly. Nothing actually to see on the monthly. Last month was bullish. We actually took out the previous all-time high. Okay. But also closed above the last month's high. Let's go to the weekly. So what you can actually see on the weekly is the last week of 29th December was actually pretty bearish. We closed below we have a candle closure below the candle of 22nd December. We have a candle closure at that point. If we go to the daily, so this is like a CST, this point. Okay. We close at below that point, although the ideal point for a change in state would actually be here, which we actually got. Would have loved to take sells from this fair value gap over here last week. I was not trading last week, but I was expecting this high to actually get taken out. If I was going to trade lower, I would expect this high to get taken out, mitigation into this fair value gap, and then continue selling. But in cases like this where you see that the high has not been taken out, always go to a correlating pair like silver or XAU Euro. I prefer XAU Euro. And you can see what we have on XAU Euro. This high was actually swept, which means we have SMT with XAU Euro. So this is SMT. What we have here is SMT. So XAU Euro manipulated. So XAU USD doesn't have to manipulate. So SMT with XAU Euro. Okay, so that is what I have. So you can see the type of candle that we had. So what I'd be expecting is an open high, low close candle. So I'll look to trade, to look for opportunities from these zones. That is starting tomorrow. So that's not a fair value gap. So SMT, this is SMT right here. So at this point, I'll be looking for opportunities. We have a few fair value gaps right here. Gold loves fair value gaps from the zone that I have marked in purple. So that's a chain fair value gap, right? And I can be looking at this zone as my drawn liquidity, where ultimately I'll be looking to take profit from. So what I'll be expecting is an open high, low close candle. Okay. So what I'd be expecting is the market to open higher and probably look for another change in state somewhere here, probably like that, and then look for continuation trade. All this is the market is all about probabilities. So a few things might change depending on how the market actually opens tomorrow. So my bias and a lot of things can actually change. Thank you guys for staying throughout the whole video. In case there's anything else you'd want me to cover, just let me know in the comment section. And I hope to see you guys. And yeah, have a good day.